This video presents an ADX indicator coupled with another indicator. I have backtested it thousands of times, and the results are astounding. We will explain the strategy and backtest it using historical data. So, let's get started. This strategy operates on a 5-minute time frame. Let's open the chart and add the indicator. The strategy includes only 2 free trading view tools. I'll explain how each indicator functions as we add them one by one. For our first indicator, we will be introducing the ADX, Average Directional Index. This indicator is designed to quantify trend strength by measuring the amount of price movement in a single direction. It is particularly useful for identifying whether the market is in a trend or not and how strong that trend is. We'll be using this as a crucial component of our strategy. Buy and sell signals are determined based on the ADX value, which measures the strength of a trend. A high ADX value indicates a strong trend, which could be a signal to buy or sell depending on the direction of the trend. Conversely, a low ADX value indicates a weak or non-existent trend, suggesting that it might not be the best time to make a trade. Of course, we can't use this indicator alone as it might lead to many false signals. That's why we need to add the next indicator called stochastic. The stochastic indicator is a momentum oscillator that measures the speed and change of price movements. It is commonly used to identify overbought and oversold conditions in a market, which can indicate potential reversal points in price action. By comparing a particular closing price of a security to a range of its prices over a certain period of time, the stochastic indicator generates a value between 0 and 100, providing a gauge for the momentum of the price. A stochastic value above 80 usually indicates an overbought condition, suggesting a potential price drop in the near future. On the other hand, a stochastic value below 20 indicates an oversold condition, implying a possible price rise soon. To adjust the parameters, change the K length to 5. This adjustment will increase the indicator's sensitivity to recent price changes. Additionally, set the K smoothing to 3 to smooth the indicator over 3 periods. With these adjustments, the stochastic indicator will respond more quickly to price changes and provide a smoother depiction of market conditions. This combination of ADX and stochastic indicators helps to filter out false signals and increase the accuracy of our trading strategy. Now that we have a clear understanding of the indicators to use, we can delve deeper into the specifics of this trading strategy. The first condition we are looking for is that the ADX value should exceed 50. The ADX is a measure of the strength of a trend, and a value above 50 indicates a very strong trend. This is an essential condition as we want to make sure we are trading in the direction of a robust trend to maximize our potential profits. Secondly, we need to observe the KD line of the stochastic indicator. Here we want the previous KD line to be below 25. The KD line is a measure of the speed and change of price movements, and a value below 25 suggests that the market is near oversold. This could indicate a potential price reversal, which is an opportunity for us to enter the market. The third condition involves the current state of the KD line. We want to see a crossover in the KD line, which typically signifies a change in market momentum. A crossover in an oversold market, which we have identified in the previous step, could mean the start of an uptrend, which is a signal for us to go long. When these 3 conditions are met, we prepare for a long entry. This means we are expecting the market to rise, and we are positioning ourselves to profit from that rise. To manage our risk, we will use fixed take-profit and stop-loss levels. These are predetermined levels at which we will close our trade to either secure our profits, take profit, or limit our losses, stop-loss. The exact percentages for these levels will be determined through parameter optimization, a process that will help us find the most effective values to maximize our profits and minimize our losses. To further clarify the strategy, let's consider another example. Suppose the ADX value is above 50, which signifies a strong trend. At the same time, the previous KD value is below 25, indicating that the market is near an oversold condition and a potential price reversal could be looming. Furthermore, we notice a crossover where K surpasses D on the stochastic indicator. This typically signifies a change in market momentum. When we see this crossover occurring in an oversold market, it could indicate the start of an uptrend. This is our signal to go long, expecting the market to rise. Let's now delve into the backtesting results of our strategy. We set the time frame to 5 minutes and the time frame detail to 1 minute. This combination makes backtesting more realistic and aligns with the real-world trading environment where price changes occur every minute. We allowed a maximum of 5 open trades at any given time, and the starting capital was set to $1,000. The backtesting period was 6 months, which provides a broad set of data for us to analyze for the 5-minute time frame. We went further to optimize several parameters. These include the ADX and KD values, which are pivotal in our trading strategy. We also optimized the take profit and stop loss percentages. These two are crucial in risk management as they define our profit targets and the maximum loss we're willing to bear in a trade. Lastly, we also tested each leverage level, a tool that could amplify our profits. Upon backtesting each leverage level with the best parameters for 6 months, here are the results. For traders seeking a low-risk profile and stable returns, using leverage of 2 seems to be a viable strategy. It resulted in a 288% profit over 6 months, coupled with an 8% drawdown. Furthermore, it boasts the highest Sharpe ratio of 17.51. We observed that most months turned out to be profitable, making this a potentially stable and reliable strategy. For those who are risk-tolerant and aim for higher returns, leverage 9 might be an attractive choice. Despite a higher drawdown, the Sharpe ratio remains high, and the profit is quite impressive. This strategy may be risky, but the potential returns could make it worth considering for a small portion of your capital. Let's go into more depth with the strategy using leverage 9. The backtesting period is 6 months, and we executed 1767 trades. This equates to approximately 10 trades per day. The total profit stood at a staggering 49.59%, a figure that underscores the potential of this strategy. Next, let's delve into the visualization summary, which gives us a comprehensive overview of the strategy's performance. The trade logs provide a detailed account of each transaction, revealing numerous profitable trades. There are a few instances where the stop loss was hit, but these are relatively infrequent in comparison to the successes. The cumulative profit line, which charts the total earnings over time, shows a smooth and steady upward trajectory. This is a highly positive indicator of the strategy's effectiveness, as it suggests consistent profitability over time rather than sporadic wins. Ultimately, we can visualize the results across various trading pairs. The data shows that most of the pairs yielded a profit, indicating that the strategy can be effective across a diverse range of currencies. This broad applicability is another strength, as it allows for flexibility in choosing which pairs to trade and expands the potential for profits. If your goal is to grow a small account rapidly, this strategy could be worth trying. However, never bypass the forward testing phase on a paper account. This step is crucial to understanding how the strategy performs in real time without risking real money. Thank you for taking the time to watch this video. I hope you found it enlightening and beneficial. If you're keen to explore more algorithmic trading strategies for cryptocurrencies, do check out this playlist. See you next time.